And we are live.
Hey Jack,
Welcome. Hi, John. It is April 30th, 7:40 p.m. Central Time.
are we seeing the snapshot from April 27th, 2025?
We sure are.
Okay, good. So yeah, there's some crypto on the top. There's gold, the S&P 500. SPY is the S&P 500. QQQ is the Nasdaq 100. MicroStrategy VIX, which I think is a volatility indicator for the stock market. The next row is Bitcoin priced in gold, Bitcoin priced in SPY, the which is the SP 500, Bitcoin priced versus QQQ, which is the Nasdaq, MicroStrategy priced versus Bitcoin, Doge priced versus Bitcoin, and then the rest of the stuff on the chart doesn't matter. It's mostly some crappy commodities and some crappy foreign currencies, and there's a whole row of things I don't even know what it is. I guess the first three rows are the ones that matter for this. But some interesting things. Uh, Ethereum is down 45%, while Bitcoin's up 46%. Solana is kind of break even. XRP, for some reason, is up 300% because people think it's going to be used by the banking system, and they're wrong because XRP can only do 15 transactions per second. And Brad Garlinghouse owns 50% of the Ripple supply, the XRP supply tokens. He owns half the tokens. Ripple owns half the tokens. So the entire banking system is not going to use a currency that some corporation owns half of. It's not going to happen. MicroStrategy owns 2.5% of Bitcoin, and they're the largest holder of Bitcoin. Um, so, and the banking system is not going to use Bitcoin either. It's too slow. Um, they're going to use probably stable coins on a faster blockchain like Solana, or even a private blockchain that the United States has direct control over, a centralized chain they make themselves. That's what the banking system is going to use. I don't know why people are so excited about XRP. And maybe, maybe I'm an idiot and I missed out. I sure missed out on 300% gains last year. Right? Like I'm just an Uber driver. Like you'd have been better off buying XRP and not listening to me. Um, although um, okay, is it late is what we want to talk about. Um, is it late is determined by TA, by technical analysis. If you are if an asset is topped out like a multi-year top, yeah, you're late. Don't buy it. But if it is at a multi-year top, it's probably going to crash, and then you'll be right on time again. Um, so I think learning technical analysis, which I'll probably talk about every single episode we ever do, is so crucial. If you're going to try to time anything, if you're going to lump sum buy anything, you need to learn TA so that you can buy low and sell high, not buy high and sell low. Um, so whether or not you're late is determined by TA on and whatever time frame you're looking at. If you're only holding an asset for a week, then all that matters is the daily chart. All that matters is what it's been doing the last couple of months. Um, and I'm not an expert in TA, and so I would point you towards experts such as the chart guys. There's a bunch of TA experts on crypto banter. Um, there's a YouTube channel, Trade Travel Chill, made by a woman who used to be on Crypto Banner. She's got a TA thing. Benjamin Cohen does great TA, very good TA. Kind of, he doesn't really teach TA. He more just shows his own TA, but that's good enough if you're just trying to follow along with Bitcoin and Ethereum and
Or learn from someone who understands the charts far better than you.
yeah, he
you
doesn't really.
know,
Yeah, he doesn't really.
this dude's a nuclear physicist.
Yes, he's very intelligent and he's very right. He
Yeah.
don't. He doesn't so much teach. He kind of just like reads the chart. Like he's just kind of like, this is how I read the chart, and he's always fucking right. I'm wrong. We just had to delete an episode because I was wrong about alt season.
Well, we didn't delete the episode because you were wrong. We wouldn't delete just because we were wrong. We would
Yeah, we
use
hid
that
it.
as an
I
example.
want to hide it from the journal. I'm
No,
embarrassed.
no, it's not about being wrong. It's about the fact that there was some sensitive stuff shown that shouldn't have been, and
That too.
That's why we got it. If we're wrong, we'll own up to it.
Yeah, and I'm wrong all the time. In fact, Benjamin Cohen's wrong sometimes, not very often, but he is wrong sometimes. The chart guys, he says he doesn't go a week without being wrong. He's wrong a lot, but he's right more often than he is wrong, and that's the key. No one's right 100% of the time. Even the very most right people are only right 80 to 90% of the time, and you only need to be right 60% of the time to make a profit. In fact, you can be right only 40% of the time and make a profit if you're making more money when you're right than you are losing when you're wrong. And that goes into trade setups. That goes into setting up your risk management, your risk return ratio, your stop loss, your take profit, and things like that. Which you can, if you watch Crypto Banter, Whale School, and other like Sniper School and things like that, and Crypto Banter, or you can even watch and then the chart guys has a lot of stuff content, so you learning technical analysis, but you can skip all of that. You can skip all the trading, you can skip all the technical analysis, you can skip worrying about being late by doing one thing, and that's dollar cost averaging, which I do, and I would recommend for any beginner. This is zero to hero. I would recommend, unless you are a trader, and if you are a trader, then you're probably not listening to me. You probably already know what you're doing. If you're a bad trader, then make sure you learn technical analysis. That's why you're a bad trader, because you're not good at technical analysis. And I don't know why so many people are like, oh, technical analysis doesn't work. I'm like, dude, have you even learned anything about it besides how to spell TA? Like, it's a skill. Like, you're not going to be good at it, right? Just because you're not good at it and you lost money trading doesn't mean TA doesn't work. It just means you're a bad trader. It means you're bad at using TA. It's like, and I think that's really important for people to understand. Like, the the amount of traders that are profitable that don't use TA that I've ever heard of is zero. Um,
Yeah, I don't know any traders that don't use technical analysis.
yeah, I've never heard of
Maybe
a
they
profitable trader.
exist. Yeah, maybe they exist, but I don't.
Now, there's plenty of unprofitable traders that don't use TA, and there's some unprofitable traders that do use TA, but they're just bad at it, right? Like, TA is a skill. Like, it's like,
Well, not only that, like there's more to it than that. It's like not. I wish it were as simple as being good at TA, and then you'd be a good trader, because it's not just that either.
oh yeah, there's even more on top of that.
Yeah,
It's about, yeah, managing your emotions as well. Even if you do, I think it's, yeah, there's even more to it as well. And and,
but
and
but
I'm
as a
done.
baseline, you need to understand technical analysis.
Yeah, definitely. Like, if you don't understand TA, you don't have a chance. Period. To even have a chance, to even start to have a chance, and it takes years to develop that skill. So if you want to spend years sitting in front of your computer for hours a day, reading price charts, learning indicators, learning and being wrong, and trying again, and learning more, watching more videos from people who are explaining it better than I can, people who are actually teaching TA. I mentioned some of the YouTube channels where people actually teach TA already. There's books about TA. There's lots of people out there that want to teach TA, because there's lots of people who want to be traders. And if you want to be a trader, yeah, that's fine. You can actually make money trading faster than doing pretty much anything else if you're a profitable trader. If you're bad at it, you can lose money too, just as fast as going to
Yeah.
the casino and not playing blackjack without knowing how to count cards, or playing poker and you don't even know if a flush beats a straight or not. Right? Like, there's a dude who was playing Omaha. Dude didn't realize that you can only use two cards in your hand. He had three clubs in his hand, and there's two clubs on the board, and he flips, and like someone had, like, whatever, two pair or whatever, and he flips his card over, he goes flush, and there wasn't even a flush possible on the board. There was only two clubs and rainbow, other suits. There wasn't even three of any suit on the board. It wasn't possible to have, and we're all sitting there like, what? And then we looked at his hand, and he pointed out, like, we thought he was joking, right? But then he, like, points at his three clubs in his hand. He's like, flush, and we're like, and we're all just like, I was trying really hard not to laugh, because I'm a douche. I laugh at people, but I was trying not to laugh because, like, obviously this guy's a beginner, and I definitely don't want to hurt his feelings for two reasons: one, to not be a dick, and two, so he stays at the table and I can take his money. But um, and the dealer had to explain to him how the game works, right? Right. If you're coming into trading like that, you're going to lose. And I assure you, that dude lost at that Omaha table. He did not win any fucking money. But where was I at? Okay, so dollar cost averaging, and there's a million ways to invest, right? Like there's people who trade off the news, there's people who trade off of astrology, whatever. Um, Profitable traders trade off of TA, and profitable investors can do other things. Like there's value investing where you're doing like fundamental analysis, looking at the price earnings ratio and the cash flow and the assets, and looking at financial analysis of a business, which is another skill, right? That's FA, and then which stands for, I think, fundamental analysis or financial analysis.
Fundamental.
Right. And you can skip all that too. You can skip all the TA and all the FA. You can skip everything by simply dollar cost averaging into quality assets. And what's a quality asset? Well, let's look at this chart. Here's a chart of some assets. Looks like Ethereum's not a quality asset. And I mean, if you're just going by this chart, Ethereum is the worst asset and XRP is the best asset. But I would disagree with that, and it's only a year. Like if you zoomed it out, 2, 3, 4, 5, 6 years, Ethereum would vastly outperform XRP by a lot, and Ethereum would be a lot closer to Bitcoin. But this is just the last snapshot of the last 12 months as of April 27th, and but you can see things like oil not doing much. Corn, soybeans, oil, copper. Those assets will never do that well because they pull more of it out of the ground. Now there's gold, which comes out of the ground only about 2% a year, which is why gold among all those commodities is probably the best commodity because it comes out of the ground a lot slower than everything else. Silver comes out of the ground at 5% a year. Silver is trash. People don't understand that. People look at the historical ratio between gold and silver. And they're like, oh, it used to be 20 ounces of silver to gold. And before that, it was 10 ounces of silver to gold. Now it's 100 ounces of silver to gold. It's going to go back to 10. Nope, it's never going back to 10. In fact, in 100 years, it'll be 1,000 ounces of silver to an ounce of gold because the supply of silver keeps growing faster than the supply of gold. So it'll always be more ounces of silver per ounce of gold, more and more and more every year, every decade, every century. That's just chemistry. That's just geology. That's just the way it is in the earth. Um,
So does that mean that you're late to gold then, because it's been around for so long?
So yes, gold's been around for 5,000 years. I would say if you're lump sum buying gold right now, it's a risky time to do it because gold just went up 40%. According to this chart, 40, what is that? 43 point something percent.
41.88.
Sure, about 42% or whatever in the last 12 months. Um, Honestly, I think it can easily go another 40%. Why? Because the money supply, the dollar supply keeps going up.
So you're saying that even though gold is 5,000 years old, I'm not late?
No, gold has no top because the U.S. dollar has no bottom. Same thing with Bitcoin. Bitcoin has no top because the U.S. dollar has no bottom. Fiat is the way they usually phrase it. Because every country has fiat currency in the year 2025. Every country does. Usually the dollar or some other crappy currency. And all those fiat currencies are just numbers in a computer or numbers on paper, and they're printing more of it, either on paper or in the computer. And so the supply of fiat is growing faster than the supply of silver and the supply of gold. Um,
Yeah,
Bitcoin.
but like Bitcoin used to be only worth 60,000 and now it's worth 93,000. So like
Yeah.
doesn't that mean that I've missed the boat?
Again, Bitcoin has no top. I mean, so Bitcoin has a 4-year price cycle. Like we usually show that on our screen. Um, Bitcoin usually tops out in the fourth quarter of the post halving year. We're in the post halving year. The halving was in 2024. The year is 2025. This is the post halving year. And it's scheduled to top out if the 4-year cycle stays intact. It's scheduled to top out, around November, December, around that time. And that would definitely be a not good time to buy. I think it was a good dip to buy when it was at 75. In fact, there was an episode I pointed out. I was like, there's a gap. You remember you
I
asked me
do.
like, what's going to happen here? And I was like, well, there's a CME gap here. I think we're going to go down, fill that gap, and then we're going to go up again. That's exactly what happened. So it's nice to be right once in a while. But and I'm buying Bitcoin still. I'm dollar cost averaging every week. I throw in $100 into into a mix of things. I put 33% into Bitcoin, 33% into gold, and 30% into stocks, so that I can sleep at night. If I really wanted to optimize it, I probably would go, 50% Bitcoin and 50% some risky individual stocks. If I wanted to, really maximize it, gold is not going to win any races versus Bitcoin or individual tech stocks that are screaming. Gold is never going to pass any of those, but gold, it does beat the S&P 500. And who doesn't beat the S&P 500? Most financial advisors. So to me, any asset that beats the S&P 500 and or the Nasdaq is worth considering putting in my portfolio. Um, and just as dollar cost average, because if you're dollar cost averaging, um, hold on a second, my girlfriend's calling. Hang on one second.
Well, I think that the point that John and I are trying to make is that even if you're late to the game, that doesn't mean that you've missed out. It doesn't mean that you shouldn't invest in this thing or that thing because it's been around and experienced a large move, a lot of growth already. That you should just value the asset based on whatever the analysis is that you're able to perform, and go ahead and invest in the asset anyways. What John was working toward was that you have a balance in your portfolio that helps you manage the risk in what ways you are comfortable with. So, what do I mean by that? Well, for John, if he was all crypto, for example, he would be terrified that he was going to lose most of the value of his portfolio in a night. So he decides to put some money into gold, into stocks, because they are respectively safer than crypto. Johnny, back?
Yes,
Okay.
and what you're saying is accurate.
I just kind of trying to kind of
Yep,
fill in the space while you're gone.
I am not a profitable trader. I'm not a profitable trader. I am a profitable investor, except for when I get fucking scared and I sell the bottom and then buy back as like every time I panic sell something, it's the exact bottom. Just every time I'm like, right away I'm like, ooh, I should sell. I think it's gonna crash, and then it crashes. I'm like, oh fuck, I should have sold. Well, maybe I should sell now. It's gonna crash more. Nah, this might be the bottom. I'll just hodl, and then it crashes more. I'm like, oh fuck, I should have. I had a second chance. I should have. I'll sell this time. And finally, I'm just like, okay, fuck it. Like it's gonna go down only forever. I finally sell, and literally that minute, finally we get green candles, and then it just keeps going up. I'm like, fuck, I gotta buy back. And then I'm good at reading like bullish charts. I'm like, okay, I see an uptrend here. Like there's an uptrend in the 4 hour. Like I got to get back in. And and meanwhile, I lost 5 to 10% of my fucking investment just in a matter of hours or days. And 5 to 10% of investment that I've been investing in for years, like that's a lot of money,
Mm-hmm.
right? Like that's not a good idea to be doing that.
Right, it's a very bad
Even if
idea.
you're only losing, yeah, even if you're only losing 1%, that's a really bad idea. If you lose 1% a year, that you lost a court over the course of 30 years, if you lose 1% a year by doing stupid shit, just 1%, you've lost 25% of your life savings. Like even if you have like a 1% like transaction fee and you broke even on it, but you had a 1% transaction fee, if you do that just once a year for 30 years, you will have spent 25% of your life savings on those fees. Like so it's really important that if you are going to make a move, that you make the right move. And the only way to make the right move that I know of from watching other people who do make right moves is technical analysis. But since I'm bad at TA myself, and I'm not a profitable trader, I'm not a professional trader. I just I just go the easy mode. Easy mode is DCA, dollar cost average. So I have it set up on my Robinhood account for recurring investments into my Roth IRA every week, where I buy a set amount of Bitcoin in dollar amount, a set dollar amount of Bitcoin, a set dollar amount of gold, a set dollar amount of Tesla stock, a set dollar amount of Nvidia stock, a set dollar amount of some of the other Magnificent Seven stocks, actually all Magnificent Seven stocks, a set dollar amount of some other stocks like Broadcom and Palantir and a few others that are hot right now. And I could just go easy and on easy mode, even more easy mode, and just buy the Nasdaq index QQQ or the SP 500 SPY. I could do that, but I'm trying to be like a little bit. I spend too much time. I spend too much time like learning stuff to not like at least apply some of my knowledge. And the truth is, I do beat the S&P 500 with just my stocks. And you throw crypto in, and I annihilate the S&P 500. I mean, just gold beats the S&P 500 usually. So there's only certain periods of time where the S&P 500 beat gold, and in our lifetimes, the only times that the S&P 500 beat gold was 1980 through 2000, which was 20 years. It was quite a stretch. And during that time, the S&P 500 beat gold. But from 5,000 years ago until 1970, actually, there was times when we were on the gold standard where stocks beat gold. Um, it definitely did okay versus gold most of the time, but like so there was decades where gold beat stocks, right? And that's why it's nice to have both, right? Because then if gold is doing, if you own both, your portfolio will be more steady, right? If stocks are going down and gold is going up, you're going steady. And if gold's going down and stocks are going up, you're going steady. And overall, they both go up, which means overall your portfolio is going to go up. So you'll be fine. And then I throw Bitcoin in there because, well, Bitcoin's the best performing asset of the last 16 years, 15 years, 14 years, 13 years. Uh, Almost every amount of years you can count since Bitcoin's been around, it's been the best performing asset. There's only a couple, there's the 4 crash years of um, 2022, 2018, and 2014. Those years were bad years to hold Bitcoin. But even including those years, even with those crashes, if you zoom out, it's still a better asset than most other things on most time frames. Um, and so, and I think just dollar cost averaging into assets that do well, I mean, is a pretty good way to go, right?
Yeah, I think so.
Like a lot of people don't invest in Bitcoin because they don't understand it. Well, fucking start understanding it. Read a book. Like we talk about the Bitcoin Standard by Safety and Moose every episode. We talk about Broken Money by Lynn Alden every episode. Read a book, get the audio book, go for a walk, listen to the audio book, get yourself informed. Read the white paper by Stoshnak Nakamoto. It's only 9 pages.
And
Like,
it's digestible.
and that's another thing about looking at this chart of assets. You're like, okay, well, XRP looks good. Let's investigate that, right? Like Warren Buffett says, only invest in what you know. Does that mean, oh, don't invest in anything because you don't know anything? No, it means start learning some shit so that you can invest in some things. And then you're like, oh, where do I start? There's so many investments to invest in. Yeah, I feel you. I struggle with that too. So how do I narrow it down? I look at, well, what assets do good? I'll start learning those first. Why am I going to learn about some shitty company that goes down only versus the Nasdaq forever? Like, why even bother learning about that company when I can learn about the company that beats the Nasdaq for the last 10, 20 years in a row, or 5 years in a row, or whatever time frame I want to look at? Like, those are the stocks I want to learn about, right? Like, that's why Tesla in the last 5 years, Tesla's up like 600%, Nvidia's up like 1,200%, Broadcom's up like 500 or 600%, Palantir's up 600% just in the last year. Um, uh, There's a few other stocks that I messed around with. Oh, ANET, ANET, looks like a real solid stock. Those stocks, whereas, the Nasdaq has only gone up about 100 and I don't know 140% in the last 5 years. The S&P 500 has only gone up like 90% in the last 5 years. But then you can even look at the rest of the Magnificent Seven, like Microsoft, Apple. Both Microsoft and Apple have gone up about 200%. I think Apple's gone up more than Microsoft, but in the last 5 years, even Google's up 160%. Uh, Amazon, I think Amazon actually lags behind, but Amazon might come charging ahead. I don't know. I think Amazon's the only Magnificent Seven stock that does not beat the Nasdaq over the last 5 years, and it's very likely that Amazon will start pulling ahead.
Yeah, I
Uh,
mean, and that's the thing is you start saying stuff like that, and I'm always like, yeah, you just said that it moved 1,200%. Nvidia moved 1,200% over the last
yep,
however long,
yep,
and I think I actually did that in the last year.
yep.
Um, and so, I know that for
So is
me,
it a top? Well,
well,
140 whatever was a top. You look at the chart, right? It pulled all the way back to 95. That was the time to get in. And even now, it's still sitting at 105 or 108. I don't think you're too late to Nvidia because look at their price earnings ratio. It's only 30 or 35 or something like that. Like,
yeah, but it was like, $10, and now it's 100, and I feel like,
yes, because their earnings went up. Look at their earnings. Here, share my screen.
let me see, making me do work now. Hold on,
No, I can do it on my end.
I gotta find where is it? There it
No, I do it, I think, on my end. Share. Here we go. Share screen. Start broadcast. Okay, I'm
is. All
sharing
right,
the
now,
screen.
yeah, you are, but you're really small, so let me fix it before you get into it too much.
Okay, so here's NVIDIA. I can make it sideways.
Yeah, but I gotta make it bigger on my end.
Oh, okay.
Okay, there you go.
All right, so in the past year, NVIDIA's up 24%. Last 5 years, 1,600%, right? But here's the thing. Okay, so let's go. See, and it's had this drop from 160 down to 90 or so. But here's the okay. Here, let's go into the financials. So it's 2.6 trillion market cap. The price earnings ratio is only 37. And here, look at that. This is quarterly. See how it just keeps going up? This is making more money, right? You look at annual. Look at that. It's making more money. That's why the price went up. It's making so much money. In 2024, their net income was $72 billion. In 2023, their net income was only 29 billion. They doubled their net income by more than double their net income. That's why the price more than doubled. And then in 2022, their net income was only 4 billion. So their net income went from 4 billion in 2022 to 29 billion in 2023, like a 7x. So of course they're priced 7x. They're earning 7x, right? Value investing. That's why. I mean, you go back in the years, like their earnings were not much. They were pretty flat. Not much special back there. Back in 2018, 2019, wasn't doing much. But then AI kicked off, and they started doing a lot. Right? You go back to the overview here. Look at their debt. Their debt's only 10 billion, but their market cap's 2.6 trillion. They never hardly have any debt. A lot of corporations have a lot of debt. Nvidia doesn't have hardly any. Here's their revenue, net income, and net margin here in the middle. The orange line is their margin. Look at that. It went from like 24% in 2020, 37% 2021, down to 15% 2022. But look at 2023, 48% margin. 2024, 55% margin. That means if they're selling a video card for $1,000, that it only costs them $450 to make it, market it, ship it, everything. And $550 of that $1,000 chip is pure profit. Like they're just swimming in cash. Like and it just keeps going up. Look at that. Like every quarter. Net income 12 billion, 14 billion, 16 billion, 19 billion, 22 billion. That's net income. That's profit. I mean the revenue is going up too, right? Like that's why the price is going up. And the price earnings ratio is still 37. That's pretty good. especially when you compare it to some other those names that I mentioned that have gone up a lot in the last 5 years, and they're scheduled to. I mean, look at their cash flow, right? Look at this cash flow. 2024 cash flow $60 billion. 2023 it was only 27 billion. 2022 3 billion, right? And less than and small amounts all the other years too, right? Like that's why it right there's a reason why Nvidia's price has gone up 1,200%. Is because their sales, their profits gone up a similar amount, right? So it's not overpriced. You are not late to Nvidia at all. Nvidia is an excellent investment. Around $100 right here. It's 108 right now. Buy it. Like I'm buying it just as heavy as I'm buying Tesla. And I'll go over Tesla in a second, right? Like you're not late to Nvidia. In fact, if you're going to lump sum buy Nvidia, now is not a bad time to do it. It was a bad time. I was up here at 140, $150, but now it's at 108. It's 50% off. Like it's on sale.
Yeah, I actually took a position on Nvidia for the first time.
Yeah, yeah. Like now's the time to jump into Nvidia. With my Uber driver TA, right? Like 5 years here, 5 years, 1,600%. Now we can go to there's Broadcom. Let's go Tesla first. So Tesla last 5 years, 700%. And here, just to compare, here's the Nasdaq. It's up 158% last 5 years. The S&P 500 is up 122% last 5 years, right? So that's kind of your baseline. Like if you have an individual stock and over the course of 5 years, it's not beating the index, then you got to ask yourself why you're holding the stock. And the answer is because you're married to it. Certainly not because you're making money off of it, right? I, you want to hold stocks that you make money off of, and they should be beating the index. Otherwise, you're better off holding the index. The index is always going to be safer than holding one individual stock. Like the S&P 500 is right in the name, 500. It's 500 stocks. That's 500 times more diversified than holding one stock. And it does decent, right? 122%, 5 years. That's pretty good. And then Nasdaq is 100 different stocks, which is still pretty diversified, not as much as the S&P 500. So it's more risky. The S&P 500 is safer, but it doesn't perform as well. It's safer, but it's 122%, whereas Nasdaq is 100 stocks, but 158%, and that's 30% faster. Force, that's pretty nice. Tesla. So then you look at, I was talking about a 37 price earnings ratio for Nvidia. Look at Tesla's price earnings ratio, 160. That's terrible. That means Tesla is way expensive. But here's the thing. Everybody hates Elon Musk, so nobody's buying his cars. The car sales are way down. So that's making the price earnings ratio look even worse. But they have a lot of products in the pipeline they're not selling yet. They're not selling semi trucks yet. They're still building the factory for it in Nevada. They're not selling robo taxis yet. They're still building those. They're not selling robots yet. They're still building those. In fact, the tariffs on China are slowing them down because now they can't get cheap rare earth metals from China. They're probably going to have to build a rare earth metals refinery in the United States, just like they're building a lithium refinery in the United States, right? So it's going to take them a few years for their sales to catch up. And if anything, Tesla's expensive. Does that mean Tesla's going to go down? I don't know. It might. I mean, you see it right here in the same charts. I was looking for Nvidia. Their shit's going down, like quarterly. In the fourth quarter of 2024, their net income is $2 billion. The first quarter of 2025 is $400 million. It went down a lot. That's bad. That's pretty bad. But that's just Tesla. And again, I'm not investing in Tesla because of its price earnings ratio. I'm investing in Tesla because of all of its future tech coming down the pipeline. And did I get scared when everyone started lighting Tesla cars and Tesla dealerships and Tesla chargers on fire and everyone started to hate Elon Musk? You're damn right I got scared. And I sold Tesla at the bottom. And I bought some of it back at a higher price, but I lost a lot of money because I got scared. But now, I took some of that money and I bought gold and Bitcoin in my Roth IRA, so it was more balanced. Because my Roth IRA was almost entirely Tesla, because Tesla's gone up so much. I was buying Tesla when it was $100, $140. I was buying it back here, and then it shot up to 489 or whatever. And so I was all drunk on Tesla, like, ooh, I'm rich, but I didn't sell any because I'm not a trader. I should have. if I was a profitable trader, I definitely would have sold as much. I would have sold all of it, or at least some of it. But whatever. That's Tesla. So let's get back to the charts here. So there's Broadcom. Broadcom's up 700% in 5 years. Um, and let's see. They have a 92 price earnings ratio. Not quite as bad as Tesla, but a lot worse than Nvidia. But they're expensive. They have more debt too, compared to their income. But Broadcom makes AI stuff, and their profit has been going up, except for last year. But then the last couple of quarters, first quarter 2025 has done really well. Profit margin of 36%, net income 5 billion. So if they repeat that for the rest of the year, there'll be a net income of 20 billion for the year, which is more than last year, which was 14 billion, right? So they're still growing. Like, they're not going to probably grow at the same pace. Like, all this heavy growth was because of AI, and they're still going to be growing because of AI. But I have, I have a pretty long term outlook. Like AVGO is, Broadcom is about, AI and servers and computer stuff. Like, I don't know, is there going to be AI and servers and computer stuff for the next 5 years, 10 years, 20 years? Yeah, probably. Right. It'll probably do pretty well. Would I have been better off buying it 5 years ago than now? Yes. But is it going to be a terrible decision? No, probably not. I mean, I can zoom out farther. It's up 11,000% since 2009, right? So, like, 10 years ago would have been even better. 15 years ago would be even better. But look at this chart. It's up only. You can really buy it whenever the hell you want, right? Like, when was a bad time to buy Broadcom? Since 2009. Well, you have to zoom in really close. Like, I don't know, uh, the new year of this year, like 4 months ago. That was a bad time to buy it. Any other time, any other time in the last 15 years would have been a great time to buy Broadcom. The only bad time to buy it was 4 months ago. And even right now, it's probably not a terrible time to buy it. I mean, even like, you could have bought this dip right here, April 7th. What was that? 3 weeks ago? Like, you could have gotten that stuff cheap, $139, whatever. But if you're dollar cost averaging, right? If you're dollar cost averaging Broadcom, oops, hold on, I screwed it up. Let's go this. I want all. Right? If you're dollar cost averaging, like, you're making money the whole way. Or lump sum buy. You don't have, like, you got to get, you can't go back in time and buy shit, right? You can only buy shit now. But what you have to do is look forward. What's going to make money in the future? And if something like this has been making money for 15 years, it's probably going to make money for another 15 years, especially because Broadcom is an AI computer server company. So they probably will continue to, and you look at that chart, this is logarithmic, right? And logarithmic, it's been pretty consistent, right? It's not like it all of a sudden made huge gains. It's been making huge gains for the whole time it's been a company. It's been making money the whole time. You look at Nvidia, like, Nvidia was choppy at first, but since 2011, it's been making money pretty steady. Since 2015, especially. Tesla kind of has a leg up once in a while like that, right? You can look at the index funds. The index funds are, way smoother. But even, there's the S&P 500. It's been making money since the Civil War, right? Are you late because you didn't buy the S&P 500 in the Civil War? Your grandparents weren't even alive, right? Like, you got to get in when you can. Like, if it's a good asset, it's a good asset. Like, anytime you get on the S&P 500 train, as long as you ride it for at least 5 years, you're making money. Like, you can see the Great Depression there. You can see the dot-com bubble and the Great Financial Crisis. You can't even barely see COVID on there. There's blips on the radar, but as long as you ride it out, like, you're fine. If you're dollar cost averaging, especially, even if you lump sum buy the exact top, you just wait a few years and you're in profit. And all you have to do to avoid that is to never lump sum buy, just dollar cost average. Anytime you're dollar cost averaging, like, you're doing fine. There's the Nasdaq, it's a little more choppy, a little shorter history. There's Tesla, Nvidia. I went through Broadcom. right? There's Palantir. Palantir's only been around for a few years, since 2021. It's up 1,000% since then. Um, are you late? I thought, I'm up. I was buying Palantir on this dip at 80, $90, right? I'm already up like 30% on it. Um, and could I have bought it back here when the chart guys was talking about it? Dan the man, chart guys, he was talking about all down here in 2023. He was talking about Palantir the whole time. And you know what? I didn't put the time in to research what it was. But what it is, it's an AI company that works with the government for defense. It also works with private businesses for streamlining their business using AI. And you know what? It gets used, and they make money, and it's going. And their price earnings ratio is the worst I've ever seen. Their price earnings ratio is 613. Their price earnings ratio is terrible. And you know what? I was buying it at 90 when their price earnings ratio was 400, which is still terrible. But now it's 600. And you know what? Their price earnings ratio, it doesn't even fucking matter because they're going to make more money in the future than they make right now. And it's just, it doesn't really matter. It's TA. You got to learn, or just dollar cost average. And that's what I'm doing, is dollar cost averaging. So I don't care what the price chart is beyond that. As long as it's done, here's First Solar. It's still up in the last 5 years. It's still up more than the Nasdaq or the S&P 500, and I like it because it's solar panels, made in the USA solar panels. But Jesus Christ, it's been down only for a year. It's down 30% in the last year. It's down 38% in the last 6 months. Like, this thing is doing terrible. Like, First Solar has just been down only. It's the worst stock I have ever bought. But its price, you know what its price earnings ratio is? Neither do I. It's 11. Their price earnings ratio is 11, but yet it still goes down. Whereas the other stocks, their price earnings ratio is triple digits and they're still going up. That tells you right there, the price earnings ratio really doesn't fucking matter. Really does not matter. Now, there's value investors and all that. And you know what? I'm not a value investor. I'm an Uber driver. And the thing is, with value investing was invented by Benjamin Graham, and probably not even invented by him. He's just one who wrote it into a book, The Intelligent Investor by Benjamin Graham, written in 1949, the first book that Warren Buffett read, to get started on his investing journey. And I'm about a quarter of the way through. I'm not even a quarter of the way through the book. I'm on like chapter 3 or something. But that book, that's what everybody reads. All the professional investors read that, and everyone's going off of that. There's no edge to be had there. I'm still going to read it because I want to know what everybody else knows, but there's no edge to be had there. The edge is in predicting the future, and I'm trying to predict the future, saying solar panels are going to be a thing. And I don't know if First Solar is going to do it, but it's going rough so far. Here's ANET as a play as a. And the reason I like ANET because they do computer stuff. Price earnings ratio is 36. They've been up how many percent? Um, ANET is up 576% in the last 5 years. Like, okay, cool, 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 cool. Price earnings ratio is 36 is reasonable. Hi, Thunder. Um, their debt is very low. Their market cap is 103 billion. Their debt's only 59 million. So they're hardly any debt. That's good. Look at that. Their earnings, their net margin is 41%. That's amazing. They're making $800 million a year or per quarter in net profit. There's per year. It's 2.85 billion net profit last year, and everything's up. Net income's up, revenue's up, profits up. Like, no debt. Like, I mean, this is great. Like, look at that. This is the red bar is the debt. The green bar is the cash flow. The blue bars they're sitting on $2.76 billion of cash. They're making $1 billion more in cash every quarter. Like, I mean, this company is fantastic. I love ANET. I just discovered it. I barely even know what they do. I don't know. Headquartered in Santa Clara, California. That's what they do. I mean, everything looks good to me as an Uber driver, right? I'm not Warren Buffett, but I mean, revenue's going up, net income's going up. There's hardly any debt. Profits going up. I can look at their see if they've been diluting shares. Now they have been diluting shares, but very, very little. And in fact, it's pretty much flat, like point oh, whatever, less than 1%. They're It's kind of disappointing to have a little bit of share, but that's why they have no debt. If they really need money, they just issue a few shares, but very little. I mean, this is very flat. Like it's this fine. Um, it's very flat. That's good. You don't want them to be kicking out a bunch of new shares. That's usually how people don't do well on a stock, is because the stock is issuing new shares all the time. But they're not doing that. It's mostly flat. So I mean, this is a good stock. Are you late to ANET? Am I late to ANET? I never even heard about ANET until like last week. But fortunately for me, they just went down. They just had a little crash here. We look at the chart a little bit, weekly candles. Back in January, they were $133, and then crashed all the way down to 60. Crashed all the way down to 60. Like that, they went on sale. Even now, they're only at 82. Like I think it's a fantastic buy. Fantastic buy. Load up on ANET. Like this is what a good deal. Like
Not
look at
financial
that.
advice.
Yeah, I'm just an Uber driver. You listen to me, like I don't know, you got some problems, but I mean, I'm trying to load up. I'm buying $3 a week. That's me loading up on something. I'm so poor. I buy $3 a week of it. But like, I don't know. Like, here's gold, right? Like, gold's up 15,000% since 1970, right? Like, um, are you late to gold? I don't know. It's probably going to keep going up forever. It's gold. Um, here's that period from 1980 to 2000 where it went down. But other than that period, it's been up. And then here's a period where it was flat because it was fixed to the U.S. dollar. But then we came off the gold standard right here in 1970 and went up and went 25x for 10 years. It went 25x up from $35 to 875 or something. And then it kind of went sideways and down for a good 20 years. And that's when, all the current professional hedge fund managers and all that, they all think gold is garbage because gold went down for 20 years straight. And that's when, guys who are our Jack, you my age or older, they would have experienced this as professional investors. And they all learned, oh, gold is trash, gold is trash, gold is trash. Well, if they kept on learning, they would see that since the dot-com bubble in 2000, 2001, gold has been on a tear. It went from 254 about down here. Now it's over 3,000. That's again like a 15x in 20 years. Went 15x in the last 20 years. Like it's definitely doing great. And we can even type in so we can type in gold divided by SPX. And I think trading doesn't also mess with the
Oh, I
charts.
can't hear you.
Sorry, I covered the microphone. Oh, good. The trading view fixed it. Good. So here's gold. Here's gold versus, and so you can kind of see that the S&P 500 has outperformed gold, since 1905, because it's going down, which means, and I have gold on top, so that means the S&P 500 has been outperforming it. But if you look since 2000 here, gold's been outperforming since then, and actually just broke out. It's on a breakout right now. It held this support, which is back from 1970, held that support. Gold held that support and it held it again here. In fact, this is a gigantic inverse head and shoulders right here with, one shoulder here in 1970, another shoulder here in 2000 from the dot-com bubble. That's the head. And then a shoulder here from 2022. Like this thing is probably going to blast off way up here somewhere. Like I think gold is, to me, it's gonna do really well. I'm looking at this chart, but also like long term, like maybe it'll just go to this orange moving average here, the 50. This is years. That's the 50-year moving average. But um, you're saying, well, why hold gold? I'm saying, why hold stocks? Gold's going to outperform the stocks as a whole.
No, it's going to outperform the S&P 500.
Yes, which
Not
which
stocks as a whole.
well, that's 500 of the stocks.
Yeah,
500 of the
500.
stocks.
There's a lot more than that, and stocks you can pick a better winner.
Yeah, and these are
Like
my winning stocks right here: Tesla,
yeah.
Nvidia,
So
Broadcom,
so in
Palantir,
my mind,
Ford.
I get owning those, and I understand the appeal of gold. But the only reason I can find for myself to own gold is if I wanted it for decorative purposes or for conductive properties.
Well, um,
Because otherwise, I could just own something else that you know what I mean, like that I
gold's
perhaps.
up 92% in the last 5 years. Like that's not bad,
No, it's not bad. It's
right?
not
Now,
bad.
now these stocks, Quanta's up 800%, ANET's up 500%, so First Solar 260%. Every single one of these stocks beats gold, right? But the nice thing about gold is it's a different asset class, right? It's a diversification away from American stocks. All these stocks are still American stocks. And when the American economy tanks, these stocks all tank, right? But gold is goes up when the American economy tanks. Um, so it's a good diversification, so that I'm not on such a sickening roller coaster. Um, and if you look at the past 1 year, right, gold outperforms a lot of stuff in the past 1 year. Gold's up 38% in the last 12 months. Quanta is only up 10%. ANET's only up 22%. First Solar's down 30%, right?
Yeah, I mean,
Palantir is
I'm not saying that stocks and gold are the same type of asset class, and like
right.
I understand the differences between the two. I'm saying gold is more like Bitcoin,
Yes.
and to me, like there's like there, like
Yeah, there's
I c-
Bitcoin right there. Bitcoin's up 49% last year. Gold's
yeah
up 38% last year. Like Bitcoin barely even beat gold.
yeah, but it did beat it,
It did beat gold. And over 5 years, it drastically beat gold.
and over
Five
10,
years.
even it's beat it even more. Like
Yes. Yes.
so, like
Yes. I agree.
so
100%.
in
I
my
agree.
so to me, I go well. To me, the choice is between Bitcoin and gold, like as a diversification asset. Like
Yes. But yeah, to me, Bitcoin and gold are my non-stocks, right? And if you've just Bitcoin, then you have only Bitcoin to diversify from stocks. Whereas I have Bitcoin and I have gold to diversify from Bitcoin. So I have gold and Bitcoin. But no, I totally get it. I'm being conservative. I used to not hold much gold. Like I've been adding gold to my Roth IRA now so that the roller coaster is not so violent for me. And you hold some cash. I kind of view my gold as my cash, right? Like if the stock market crashed 50%, and I was pretty sure it was the bottom, or gold crashed, 75, or Bitcoin, if Bitcoin crashed 75% in 2026, which it probably will. Well, maybe not this time because the institutions are buying it, but whatever. Solana's already crashed 60%. And I think it's not bear market yet, so not really like buying in hard. But if I was going to buy in hard on my Roth IRA, I can sell my gold, right? I can sell my gold to buy these more roller coaster assets at a bottom if I'm ready to like you can buy the dip with cash. I can buy the dip with gold just the same.
sure.
Just an extra step. I have to sell my gold first for cash and then use the cash to buy the dip. So, so there's that. But while I'm waiting to buy the dip, it's going up in gold, which is why I'm holding it in gold.
Sure.
So it's kind of the same thing. It's not a very big difference between me and you.
Well, and I don't. Yeah, and I usually actually don't keep cash. Like I made some. Moved into some cash so that I would have some. Like basically, I moved into cash when I sold some of my stuff because I saw a downturn coming even further.
Yeah,
And then when I bought back in, I didn't put all of my money back in.
yeah, and I
Like
think
I,
we still could dip further too. That's a good
yeah.
move.
Well, and
Yeah,
I get sick of never having anything to buy a dip with.
yeah, totally. No, I totally get it. So like looking at Bitcoin, like, are you late right now buying it now? I mean, maybe. I think we could go to 120. I think I had a price target on Bitcoin of 120,000, and that's from looking at this chart, right? This is a logarithmic chart since I don't know 2012 or so, and it has a top here, a top here, and a top here. We're probably gonna have another top by the end of the year. Um, and even if you bought a top, like whatever, you're still up. It doesn't matter. It's better to buy a bottom, but you can buy and if your dollar cost average when you're golden, Like that's the nice thing about dollar cost averaging. It's like you can dollar cost average starting at a top, and it's actually pretty good. Like if you're at this top here in 2014, you start dollar cost averaging there, you're dollar cost averaging through this whole bear market. So when you catch the 2017 bear bull market, oh, you're making money because you were dollar cost averaging this whole bear market. Like that's good, right? Like you could have been early here, and you could have dollar cost averaged from here to there, and you would have dollar cost average over this whole top. That's actually worse. Like, and it doesn't really matter. Like if you're dollar cost averaging, it's going to work out. Like if you have a long term time horizon, and your dollar cost averaging is going to work out. If you have a short term time horizon, learn TA, learn to trade because that's what you need for short term. By definition, if you're doing short term trades, you're a trader. And like Jack and I said, yeah, you need to learn TA to be a profitable trader. But
Yeah, well, and then that kind of moves to, I think, the point for me of this episode is that when the question, like, are you late to something? When you're asking yourself that question, you have to understand where an asset is and what your time horizon is, because like you said, if you're trying to make a quick buck in the market, well, then you have to really understand your technical analysis, because that's what's going to rule the short-term moves.
yeah,
Technical analysis also rules the large term moves, but you have a lot more reaction time. And
yeah,
so, if you're talking about trying to make a little money in the market quick, well, again, learn the TA. If you don't, then you're not too late. It's all about your time horizon. Like if you have a year, like it does matter, I guess, when you're going to jump in. If you're going to jump in you've only got a year to play with, you got to make sure that you're in the right point of the cycle for that asset. So being late is a thing at that point. The only thing that ever prevents you from not really ever being late is, like John said, dollar cost averaging. That's the only way you can ensure that you're never going to be late. But if that's the case, and you're going to dollar cost average, then you can, well, I was not going to get into DCA with on steroids, but more about like you have to just make sure that the asset is going to be around in some time. You know, I'm sure we could look at some assets that aren't going to make it too. So, anyways, that's all I have to say.
yeah. Um, oh, we could just cut it short there. I don't
Well,
know.
yeah, we've been almost for an hour now, anyhow. So, yeah,
Okay.
unless you had any final thoughts, we'll go ahead and kill the stream.
All right.
All right, thanks everybody for checking us out. We'll catch you next time.